Hello and welcome to our market alert video for today, the first day of December 2023. I am Ken Moraif. I'm the founder and CEO of Retirement Planners of America, and we're a firm that has a single noble purpose in my view, and that is to create as many SCWPers as we possibly can. And in case you don't know what a SCWPer is, SCWPer is the acronym for Second Childhood Without Parental Supervision. So when our clients retire, we want them to become children and go have fun. And therefore, we've nicknamed them a SCWPer. So anyway, let's talk about what happened this week. Kind of an interesting week. Of course, November ended, and I kind of wish, I was thinking, I hope November never ends. I mean, the way the market's just been going up, it's just been wonderful, and we've been basking in the glow. Don't want November to end. December starts, the market was down earlier today. But guess what? It looks like December is off to a good start. And so maybe things are going to be okay through the end of the year, which is our view. So let me go over with you an important thing that happened today. Jerome Powell, who is the Federal Reserve Chairman, gave a speech, and everybody wanted to hear what he had to say, of course. And he said that it's too soon to speculate about us lowering interest rates next year. Now, right now, it seems that there are many investors who are actually forecasting next year that there will be 6 rate decreases. The Fed's going to lower interest rates 6 times next year, starting in May. And so he wanted to kind of calm people down and say, wait a second, don't speculate. It's too soon. And we agree with him. It is probably too soon to be speculating on that. However, it is what's driving the psyche and the markets in our view. The notion that inflation is under control, maybe even coming down, the trend seems to be that way, that interest rates will be coming down as well, and that we're not going to have a big, bad, terrible recession, and that profits will be okay. And all of that seems to be a wonderful scenario. And so people are investing to get ahead of that so they can participate in it when it does happen. Our view is that next year is shaping up to be a very good year. We do think that if, in fact, the Fed is done and inflation does start to come down, the stock market, the S&P and the Dow should do very, very well next year. However, a surprise we think that will happen is we actually are starting to think that the bond market might actually do better next year than the stock market. Wow, that would be kind of crazy, wouldn't it? Well, the reason why we say that is because the bond market, as we've chronicled for you here over the last several months, has been going through the worst bear market since we've been keeping records, since the Civil War. And so if you have a terrible bear market, think of the Super Balls, if you drop it from a high place and it hits bottom, it bounces back, and the bounce tends to be pretty high. Markets tend to behave that way. So we're looking for the bond market next year to have perhaps the most significant rebound that it has ever had. It could be historic. So we want to wait for one more data point. In about 2 weeks, the Federal Reserve is going to tell us what they think about interest rates. The day before that, they're going to get the inflation data. So we'll have another important data point to guide us. But it's starting to look like bonds are going to be a very great opportunity next year, but we're not ready to pull that trigger yet. We'll keep you posted as we go. So right now, things have worked out exactly as we said they would, right? At the beginning of the year, we told you that we thought inflation would bottom in June. We said that we thought that it would start to go back up towards 4% by the end of the year. And in fact, that is exactly what happened. We said that the inflation going down like that would cause the market to go up significantly, which it did. And then we said when inflation started to go back up again, it'd be like, oh no, maybe we're wrong. And we'd get a correction. And sure enough, we got a 10% drop in the market. But then we said it would pass and the market would go up after that, which is in fact exactly what has happened. So what I always say is, you don't need any other source. You just need to watch this video and that's all you need. Anyway, we'll see what happens, but right now it's looking like it's going to shape up the way we thought, and next year is shaping up to be a good year as well. So share this video with your friends, family, business associates. Come in and visit with us and see if we can turn you into a SCWPer. All of it is available. Our website is RPOA.com. Thank you for watching, and we will talk soon.